evening. I don't have long, but we finally got a laptop somewhat charged, even though the battery isn't by that great. So I want to start off with this week. We had one trade we took, and I am on a work trip, so it is a bit difficult to really get time to really trade. But from what we've seen so far, I entered a buy here. My reasoning: Asia London highs was at this swing high over here, which was created at 115467, which was our trade yesterday. We then drew a Fibonacci retracement from the low of the Asia low to the Asia high, and then we created this being the optimal trade entry. Price came into it once, which is this fair value gap, which is in this between the 705 and 79 level, hit and created this Asia high, sorry. Then London liquidity, we then form an open here, and we take price down. And then when we take price down, we take it all the way back down to the exact same fair value up. I also realized you can use a fair value up that has had multiple touches, but obviously the more touches, the weaker it is. But to compensate for that, if I am very bullish or feel very strongly towards an idea, for example, let's say I'm very bullish and I feel very strongly towards that, I would still account or still use a fair value up that's been tested before. So we had one touch, two, three, and then price came back into it the fourth time. So that's where we got our entry. This green line, buying it to here. This is our target. Why is this our target? So this red zone is an order block on a larger time frame. So I would expect institutions to gradually start putting in sell orders. However, there's going to be some buy side liquidity they're going to take out first. I don't know why I said first like that. They're going to take out first. So we have to be careful. That's why I said very tight target. And that was then I think it was a 1-to-2 restored ratio. So it was very passive and it was very quick. We were targeting. We wasn't targeting like, 1-to-10, 1-to-8, 1-to-5. So that's what funded the buy. Now, I had in the back of my mind the bearishness, the bearish side of things, because momentum. What's the other word? Momentum, and what's the thing where? Hmm, I forgot the other word I'm looking for. It was momentum and the underlying tone. No, it wasn't underlying tone. The underlying tone was bearish, but the momentum was bullish. And by momentum, I mean short term. We were quite bullish, right? And I should have an example. What was that again? Was that EU or GU? It was actually EU. Wait, when was this? Oh, this is the daily time frame. Okay. Hold on, something's. There we go. Okay, yeah, this makes sense now. I don't know what was happening. Anyway, you can see here, let me go to the hourly, it's probably clearer here, that we are bullish. Originally, okay, my battery's dying quickly, so I do have to be quick with the stream, otherwise my laptop will shut off. So we came and consolidated here. When we created this area of consolidation, it was between two fair value gaps. This upper one here, and then this lower one on the smaller time frame, you can see it clearer. Price consolidates, breaks above, and I was potentially waiting for prices to come back in the range, take out the lows, and then potentially go up. It didn't do that, just continued up. You can see it just kept going up gradually. So we entered in a buy. When was it? 10:02, so about 10 a.m. So yeah, we entered in around here, targeting this. Price came up, came all the way back down into this fair value gap again. This is the area here, and then went up and eventually delivered, and it went up beyond and came up here. Now I'm interested in sales. Why am I interested in sales? Well, we're at this 4 hour fair value gap. We are bullish, to be fair, on the 4 hourly until we take out this low, which was where we consolidated. So until then, we break this low here, we're not properly bearish. But the reason why we're looking for sales is because we have got that reaction being backed up by the 4 hour fair value gap. Now, just trading off a zone doesn't mean it's okay, we're good, because it's a 4 hour fair value gap. It's also a daily, what do you call this thing? Daily fair value gap. And even better yet, it is a weekly order block. So it's a place where institutions will start to get in. So what I would expect to start seeing is that slowdown in price, and we're getting that. And this is now transitioning from a bullish market into a consolidation into a potential reversal, right? That's the phase and what we're looking for. So if you then go to DXY, interesting enough, it will mean that we're bullish. So what you would notice about this is that we have a low here, which is this swing low, and then this high over here. Price failed to create a high over here, and then it displaced downwards heavily, taking out this swing low, and then reaching this order block here. We reached this order block, and then we reacted to it by closing above the open and the high of the order block here. I'm looking at this last bearish kind of move. And then after we wicked, we created equal lows, yes, but we also reacted or kind of pushed up from it. So if we were to sell this, let me show you something. This is swing high over here. This is the swing low over here. If we were to sell this, the minimum that we'd have to wait for is this area here, this fair value gap that we've drawn, because that's above equilibrium. So that's the earliest we can get into the price. Ideally, you want to get in maybe at this 7-9 level, halfway between. There is a fair value gap here, which would be a better place to enter because it's a deeper pullback. You can also say as well that that sell idea will be backed up by the fact that there's a swing low here. And since price closed below that swing low, retracing is backed up by two ideas. If I was looking for a sell, I would wait for that push up. If I was looking for a buy, I would also be targeting ranges of that move. Sorry, I am multitasking, so I do sound a bit like I'm talking my tooth. Sorry, English. I'm very tired. I might delete the stream. That's how poor I'm talking right now. Forgive me. So if I'm bearish, I'll be waiting for price. I'll come up to this area here, minimum, to sell. If I'm bullish, I would be waiting and targeting no further than this area here. So my point is that with both a bullish and a bearish idea, we're looking for buys. So we're bullish on DXY in the short term. Once we then get to this area and then we see how price reacts, then we can then determine if we are really bullish in that we are going to take out the highs over here and then this swing high over there, or if it's just a pullback for a continuation to the downside. That will be clarified. Now, the good thing is why I'm not completely bearish is because we didn't close below this low here. Yes, we closed below this low, but this is a minor low compared to this one. This actually is part of structure because this one isn't a clarified low because price didn't create a high. If we had created a high here, right, and then broken this low, then I could be saying, okay, we're bearish. But we broke a low as an internal low. Why is it internal? It's internal because it's within the range within the range from this low to this high right here. I beg your pardon. So in this range, from that high to this low, price has not broken either the high or the low. So we're within this range. And whilst we're within it, we're going to see price be volatile You want to take out larger pools of liquidity to have set a clear sense of direction. Because when you set your targets are based on this time frame. So then if you then transpose to a lower time frame and then you start having the same ideas, or you try to take the same formula and apply it to a smaller time frame, it won't work because it's specific to this time frame. Because there's something special about this time frame. The speciality of this time frame is the fact that hedge funds use it, smart money uses it, banks use it. They all use the daily time frame. Of course, they use other time frames too, but they like the daily because the daily holds a lot of liquidity. A lot of orders are going to be based on the daily time frame. So that's why we spend a lot of time on the daily time frame as opposed to any other time frame, because to see an entry is very easy. You can go into any pair, any instrument, any time of the day, and you can get multiple entry models being triggered. But entry models are gambling if you don't have a context. It's like trying to answer a question on the exam paper without studying, or taking a guess. Well, yes, you might be right. Yes, you might make money. But if you don't have the understanding behind the answers of the question, then you're less likely not only to get it right, you're also less likely to get it right the next time. And that's what trading is. It's a numbers game. You got to understand. If you don't understand the trade, you don't take the trade. And you build your understanding on stuff that works. Now, I have my method of trading. I'm not going to knock anybody else's. I didn't only make money through this model. I've made most of my money actually through support and resistance. However, my support and resistance model was very different. Like, it wasn't retail esque. It analyzed, or it acknowledged that there was a big player in the market, so it was a little bit more advanced than retail. The reason why I analyzed that there was a big player in the market is because some things were just not making sense. I would have a very retail will tell you that the more touches you have, the more secure the zone is. So by that logic, I should not be being swept out. It doesn't make sense. So the worst thing is when it sweeps at me and then goes in the direction I predicted, because I used to be a better direction trader because my analysis was tailored to specifically direction. This time around, I'm tape reading, so it's like I'm using all what I knew as experience for direction. Now, I'm saying a lot of words, but like I said, I'm just remind people that are new here. This channel is not for me to be teaching people. It's not for me to grow. I'm not trying to grow subscribers or likes, none of that. I don't really care per se. I'm doing this for me. It's a documentary. It's an accountability partner that I can show up every day. It is also something I will look back upon to show people that, listen, it takes all that. It takes all the study and takes all the work. When you're a trader, well, a lot of traders, they get drawn into trading because of the potential, but they're not able to ever see that potential because they have never been taught ability. They have never been taught current ability. They have never been taught delivery on that potential or to exercise your potential. The potential fastest player in the world could be sleeping in bed all day, but we will never know because they never did anything. Potential is nothing without action. So you may think action is just watching videos. No. What's the difference between watching a video and watching a film? There's nothing. You're just watching something. You're just watching it. Not watching something doesn't do anything for you. The only time it does something for you is if you learn from it and then do something about it. I'm telling you now, Marvel's Avengers. I love the TV show. I said, the film series. It has not served me anything in my life. The best I could say it's done is it's helped me in some conversations. Not even helped me. I've enjoyed speaking about it to some people, like family, friends, and family that watch it as well. That's about it. I like speaking about it. It hasn't served me in terms of wisdom or growth at all. Obviously, I'm being a bit harsh. There are probably some lessons you can lean from. Like, you can always look or something from a lens of, oh, friendship. What can I learn about friendship? Or what can I learn about humility? You know, it depends on the show you're watching, depends on the posture you take. But as logically speaking, I could have never watched a single Avengers film. My life would be the same because it didn't contribute to where I am today. That's my point. So watching something, just because you watch people trade, it doesn't mean you are learning. It doesn't mean anything. In fact, I always say it's useless. The only thing that's useful is what you do. Now, you can now almost look at that back to front. If what I do is so important, how do I then learn what to do? You watch other people do. What? You watch other people? Didn't you just say that watching people is useless? Yes, if that's your first point, if that's your target, if that's your goal, if that's what you're trying to do on its own, yes, it is useless. Oh, Jim, sorry about body. Okay, so I think I've done enough waffling. Do I want to go into more detail? I think what we'll do, we'll pick up later tonight, around 10, 11. I might talk about it again. So remember what we said about DXY? We're bullish for two reasons. Because if we're looking for sell ideas, we would be waiting for price to get here. Then we would wait to see another confirmation. The reason we would wait for that extra confirmation is because we haven't created a high here, meaning that us taking out this swing low is not a market structure shift. It is a market structure break. Shift means that the whole tone has changed. Break means that you've done the bare minimum, which is taking out swing low. Taking out this, we've had a market structure shift. Why? Because this is a swing low and it's a higher low. Higher low than what? Than this low. You may argue that this low is higher than this, but it's not a formed low until we create a high high. That's market structure. Okay, 31 past. I need to leave here in 20 minutes. Okay. Let's start wrapping this up. So yeah, we're bullish up until this point. That's DXY, remember. So that means we're going to be bearish on these types of pairs. Why would we be bearish here? Why would we be bearish here? So what do you notice? Well, for one, we have high, low, high, low. To be fair, we haven't formed a high. But what is that? That is a bearish structure. Okay, let's look at this leg from here to here. High, low, high, low, high, low, high, low, high. The things that institutions looked at is this was too clean. So when price came up here, what most people are going to do? Sell. Why would they sell? Even if you're a retail trader, you'll see this and you'll see sell. Why? Because price has just been doing that. Why would I go against that? But what they failed to realize, and I was probably a part of this loss, is that institutions can do what they want. Because look at this. Boom, they take price back up into this fair value gap, this order block on the weekly, the daily fair value gap, 4 hour fair value gap, and potentially taking price to then continue that move. But what did you notice? That they took out all this liquidity, all these highs. You can see this is over a course of many, many days. All in taken out within basically one move, which was fueled by news. Now that's why I took my loss actually. Not really around here, it was around this push up, entered sells. So it's taken us here, and I expected the price when it took us here to come down, but I need to wait. So I wasn't really looking per se. You can see here we're bullish, but I was like, you know what? Let me look for buys, and I was passive, and that's what then fueled the idea of this buy right here. And I forgot to update you or finish off by saying when price came back down the first time, I just closed that break even, as you can tell by the annotations. Yes, price ended up reaching our target and some, but we ended up closing it because that's just our principle. It was going against the trend. Break even is fine. Like it's still like we didn't lose money. I'm a protector of money. Then we didn't get we weren't super confident on the buy, because we had the underlying tone of sales. So on that note, we'll try to pick up and talk about learning by doing, how to learn how to trade, which is interesting that People just learn how to trade, but nobody knows how to learn how to trade. So we might touch on that later tonight. A little bit, so let's forget. And we also spoke about to learn how to trade. And then the second thing, what else was we talking about? It was we did talk about watching equals useless. Very bold statement, but I can back it, and I will gladly have a conversation with anybody that disagrees that watching something is beneficial to you. I think watching something is not beneficial to you until you go into that thing watching it with a perspective. That's my point of view. So watching something on its own doesn't mean anything. It exposes you, but it doesn't mean that you would have changed. Because many people watch a film, many people have different stories, different opinions, different reviews. So watching it cannot be what it is that makes something good. It is the person that decides whether the film is good or not. Think about it. There's some bad films out there, but somebody loves it. Someone out there will love that film. It might even be their favorite. So that means that despite all the flaws you may think it has, somebody else sees it and still enjoys it. So that means it's a perspective thing, not a fact. So watching something on its own cannot be the key to success. If it was, we'd all be rich. Why? Because we all watch stuff. That's my point in my argument. Watching is not the tool. It's not the turning point. It's not the deciding factor. That's the word I was looking for. Watching something is not the deciding factor. It is what you do that is the deciding factor. The reason why what you do is the deciding factor because it's the fact of where you decide. Decisions are not just I will do something, it is an action. How do you know somebody decided they'll be early? By them being early, right? If they decided to be early and they were late, did they really decide to be early? No, they just thought about being early. A decision has to have an action to cement it. Otherwise, it's just flattery, words. I decided to dye my hair blue and I turn up and my hair's black. I didn't decide to dye my hair blue unless I'm going to do it. But until that point, I'm a liar. You're only a truth teller or a person of the truth or or a man of your word, woman of your word, if you do what you said. Until that point, you're a liar. Okay, I'm coming out with some bold statements here. But anyway, I can argue anything I say. So I gotta go. So I'll catch you guys later tonight. I'll do face cam. It'll just be me talking. We'll talk about how to learn how to trade. We'll talk about watching. I'll go into detail why I think watching is useless. Watching videos on its own is useless. I'll talk about perspective, and I may touch on. I want to touch on something practical. Let me look at the markets. Talk about deciding. Just making notes of what I'll talk about, and then I'll also talk about belief acceptance. I'll make this last point before I answer you. So I was talking about myself earlier when I mentioned very subtly, it was in passing, I protect money. The reason why I said that over myself is because it's something I've not been good at in the past. Not in that I'm liberal. Liberal, I don't think is a bad thing because I'm not liberal in terms of I splurge or I spend money on useless things. Liberal to people, like when somebody needs something, I'm with somebody, I'll buy the Uber, I'll buy the this, I'll buy food, I'll buy the. That's what I mean by I'm normally liberal, right? So when I spend money like that, I don't really. That's not me being bad spending habits. I have a budget for that. But in the realms of trading, I would struggle to successfully what's the word? Not compound, because compound is a slow build. I'm good at slow compound. But I was struggling at scaling. It's slightly different to compounding. Scaling is the intention of expansion. Compound is the intention of consistency, of small steps, of of taking a step. Okay. So let me rephrase that. The intention of scaling is expansion. The intention of compound is taking a step. That's all you do. You take a step. That's all you do. Savings account, £5 a week. That's all you do. You just put the £5 in. Maybe it's daily, £5 a day. Wake up, bam. It's a small step. £5 is not much money. Most people make more than that many times over in just an hour, even at the lowest of paying jobs. So what does that mean? So much I have to say. What does that mean? I was good at compounding, wasn't good at scaling. Expansion is a skill. I didn't know it was a skill. I thought once you were good at compounding, it will automatically translate to scaling. Scaling is a different ball game. You need to be a completely different person when it comes to scaling because scaling it requires uh, different skill sets than compounding. Compounding you can get by good character, consistency. Scaling, you need to know how to do it. You know, it's not about what you're born with, what you learn. You just need to know and have the ability to do. So you need a certain level of power, I would always say, to expand. Do you know what it means to expand? Anyway, the reason why I'm saying I was protecting good money is because scaling, I entered scaling unknowingly, and in that I entered the ability or the frame of doing things I wasn't familiar with doing. So we'll talk about all of that tonight, hopefully. So scaling and compound. So I'm going to review the topics and I'm actually going to end the stream. I'm going to hover over the end stop streaming button so that I can not waffle long because I can do that. So the topics that we're going to talk about tonight, if you're interested, stay tuned. It will be how to learn how to trade. I actually had a conversation with somebody today that asked me, could I teach? And I said, yeah, I can, but I don't like doing it. And there's a reason why I said that. So I'm going to teach you how to learn how to trade. I'm not going to teach you how to trade because that's a never-ending journey. I'm going to teach you how to learn how to trade, how to find the right person to watch, how to take notes, what to do with that, etc. Watching being useless because a lot of people watch something and they think they know everything. That's why some people have come to me and said that they could go to people's jobs and say they know what they're doing better than the person because they saw a video on TikTok. TikTok doesn't teach you nothing. It teaches you an overview. It's difficult to find a page that really goes in detail and successfully talks about a topic unless it is a very baseline, soft topic. Then I'm going to talk about the difference between belief and acceptance. Actually, I don't know why I was referenced to that. Belief, acceptance. Oh, I think this is to do with stop loss. I'll make a note of that. Yeah, so belief in your targets and acceptance of your targets, meaning that when price returns, if it retraces, you accept it and why you should accept it, when you should intervene so you can avoid coming out trade too early, etc. Perspective, so that's going to be linked to watching because how I mentioned the analogy, which will be reused, about how many people can watch the same film and all come out with different opinions. Then we're going to talk about deciding and action. Because until you've done something, your decision is inactive. It is dead. It is almost the equivalent of a lie until you've done something. I'm going to dye my hair blue. I just said that, but when you look at my hair, is it blue? No, it's not. It's black. So now it is an open-ended statement. But the decision to actually do it hasn't been made. I would argue it hasn't. Because I can decide today I'm a millionaire. But if I don't show you £1,000,000, where's the proof that I've said I decided it? You need the evidence of the thing. Many people decide anything. They decide to marry somebody. They decide to love somebody. But do they really love the person? Do they really marry the person? You will see at the end when you've made it past 20 years, 10 years, 5 years. Then we'll see if you decided to marry the person. I see decisions differently. Sorry,